Guys, this is trade of the day. I'll be going over today's trade that I made on Thursday, August 17, 2017. Just want to quickly thank you guys for watching all my videos. I know there's a lot to learn when it comes into trading, but using the YouTube channel, this YouTube channel that I created is a great resource for those who are beginners who want to get to know a little bit more. So definitely welcome you to view it. If you haven't subscribed, definitely recommend you to subscribe. It's a great way for you to kind of get started in the journey. Now, as a reminder, this video is for learning purposes only. So today I'm going to cover an earnings breakout. But this, instead of when I usually trade earnings breakouts, I do look for a strong open for a pullback, and then continuously move on that. But I've been trying this new strategy and it works as well. One thing you want to remember as a trader, the two most important things are liquidity and range. Liquidity because if you're a big time trader, you want to make the big bucks. You need a lot of liquidity. A lot of shares have to be traded, a lot of volume in order for you to get it out quick. The next thing is, of course, the range. You need a big range where you can make amount of money from there, so you have some sort of margin of safety as well. So it's very important. You need a big range and liquidity. So that's the reason why I traded Baba, because there was a lot of liquidity and there was a huge range. Now, today Baba announced earnings. The market liked it. The estimated was around, let's see, I think this works. Okay. Let me see. There you go. Okay, so the market estimated 95 cents a shares, and they actually beat that by $1.19 a share. So that was great news. There was actually a 17.89% short float on this stock. And that good news, of course, squeezed a lot of short sellers. So that's the reason why I just saw this huge gap up on high volume. Because you got short sellers covering, and you got momentum traders, kind of like myself, buying for the opportunity, and that's when you get short squeezers. So, but I usually don't trade in the pre-market because they did announce their earnings pre-market. Now you guys can see this gray area. That is the pre-market, because the market usually opens at 8:30 Central or 9:30 Eastern or 6:30 Pacific. That's where I'm trading at this hour because I do live in the West Coast. So they did report around 5:42 a.m. Central Time, and as you guys can see, short seller got squeezed and it pulled back and boom, and then again it started a downtrend. Short seller started again shorted and take their money again. So I don't usually trade the pre-market. I try to avoid it. I'm more of a opening trader or mid-morning trader. That's where I feel my edge is. Again, there's some traders really good at the pre-market. That's them. I may move into that, but right now I feel very comfortable trading the open and mid-morning. So the most important thing in this trade, of course, like I mentioned, was volume and range. Now, right now, Baba's traded almost 50 million shares. That is insane. If you have a couple $1,000,000, you could get in and out no problem, with several $1,000,000. That's the reason why big traders like these stocks, because they're so liquid. You get in and out in seconds. It's a couple $1,000,000 in and out. And that's where the real money is made. But again, not that a level yet, more of a couple hundred, couple thousand, but that's okay. So one day we'll get there. So of course, my goal was to trade a bounce. I was looking for the bottom, looking for a bounce. Again, a huge range from 160 to 171. That's $10 range. Eventually, my thought process was eventually the stop is going to find a bottom and bounce, and that's what I was looking for. So, of course, to find those levels, you need to find support and resistance levels on the chart. So the first support level that I was looking for is actually right here because of this. See how it supported this and it bounced from here, this area? So that's where I put a line. And that was going to be my first support level. So moving into the chart, the next thing is trying to find what I call a higher low, and they kind of justify for me to put in open a position. And there's more to it, of course, but higher low gives you an indicator that what price may actually bottom here or it might start reversing. And I actually didn't see that until here when 163.85 held, and it could have gone down even lower. Now, to kind of make more of a conviction trade, it also broke of the downtrend. There was a downtrend right here that sometimes is kind of hard to see, but there was a downtrend right here. Boom, right there, And once you kind of get to, see this, and once you start trading for a while, you'll notice things like these, and it kind of gives you like a little edge, and it tells you, what, this is gonna break trend. This might be the bottom. So not only did it double bottom, higher low, or actually double bottom here, but it also broke this downtrend line. Boom. So I did open my position here, risking on a low day, meaning that if price, for whatever reason, comes back and goes down below low day, I'm out. I'm taking my loss, quick loss, small loss, and going home. But it didn't. It started to continue to trend, started to pull back. Now these levels of support and resistance started to hold. That's a good sign right there. And that's where I decided to put another trend line right here on these levels to see if that was going to hold. And it did. And it did. And again, I was putting these trend lines before price was even hitting these levels. So I was kind of predicting that this was going to break out of this pivot point level or this resistance level. And so I opened a position here, and I was kind of waiting. See, I might add in my winning position depending how the price acts, if it starts trending. And I did add this right here, and I like to add these, we call it flags, because a flag is one of the most, I guess you could say, high probability patterns out there. Of course, there's bearish flags, and then there's bullish flags. This is a bullish flag that I was looking for. So I was thinking that if this price breaks above these higher highs, again, this is a higher high, then lower high. If this creates a higher high, this is going to break out of this resistance level, and that's exactly what happened. So I did add in my position right here around 165.50 once it broke out, risking on my opening average. And boom, it broke out. And I know it kind of looks very interesting to watch. And after you do this for a couple years, and you start understanding how to read charts, support and resistance levels, trend lines, and you understand bullish signals like trend line breaks or flag breakouts, you start to see these things before they happen, and you start anticipating them as well. And that's where the best traders come from. When they start seeing things before they happen and anticipate the trades, and they make trades with conviction. Of course, there's a lot of rules. When it comes to trading, you always want to add to winners, and you always want to cut your losses short. If your trade didn't work as you planned, so you have to have a plan. Number one, you have to cut your losses quick if the plan doesn't work. Two, if your plan works and you have you're up in your position and it starts trending, and if you want to add more risk, you could add, but only on your winning position, and only risk on house money. Meaning money that you've already made. You might be up a couple $100 or even up $50. If you want to risk those $50, again, it's almost like risk-free. Because you've already made it. You're not necessarily risking any more money out of your own pocket. So risking those extra $50 to potentially double that, make another 50 is absolutely worth it. And especially when you see these patterns, like these flag patterns, traders tend to add to their position as well. So I wasn't the only one adding. There was other traders also looking for the bounce, adding to it, and that's why you get these explosive moves right here. So from 165, it went to 168. That's a $3 move right there. So that's where the money is. Now, again, this is a lot of liquidity, you know. So I have a feeling a lot of traders who've been doing this for a long time, they have really big accounts, probably made a, I don't know, maybe $50,000, $100,000 on this trade. Again, the reason why is because of the liquidity. I know there's some penny stocks out there. They move up to 100%, 200%, but they're not that liquid. You can't go in with $100,000 and get out ASAP. No, you actually go in with 100,000, you might actually lose 50,000 because of the bid-ask spread, or there's really no liquidity. So you have to understand that. Liquidity and range is what it's all about. And that's the reason why I trade this. So, in the future, I do plan to go a lot bigger, especially in these type of trades when there's so much liquidity. You should go bigger, especially if the trade is working on your way and it's trending and it reverses, like everything looks great, you should go bigger. So I hope this made sense to you guys. I hope you guys learned something. There's a lot to learn with trading. There's different ways to look at every single trade. Again, for every trade, there's always somebody who's bearish. There's always a short seller, and there's always a bullish buyer. So keep that in mind. And I hope you guys like this. If you have any questions, feel free to put some comments, DM me. If you like this video, hey, please be sure to click like, and you guys will hear from me soon. Thank you very much.